Hey everyone, my name's Andy. My channel's Finding Value. If you like my content, please subscribe, click the thumbs up button, do all that cool stuff, and leave some pretty cool comments too. So I'm going to go over U.S. housing market, and I have an article here that says it's not crashing. And you have all those YouTubers, oh, it's going to crash. So I want to look at what October 2020, what the housing market did, because remember, that's one of our leading indicators to see if inflation's coming, and it is coming. So we're looking, we scroll down here, and I'm going to read some of the highlights here. It says, as was expected, home buying and selling prospects drastically improved in October 2020 from pandemic lows. With unusually high buyer interest this late in the home buying season, buyers are moving much faster than this time last year to beat out competition and lock in low mortgage rates. At least that's what they think. There's just a bunch of demand out there with no homes to buy. Homes are being sold at an increasingly fast pace when compared to the previous year. Housing prices have surged to new records due to very strong demand, but low mortgage rates are helping buyers offset the increased cost. That's where they have it wrong. Mortgage rates for housing are anticipated to stay at near 3% over the next 18 months, which will make homes more affordable. What I'm going to say there is that the supply-demand imbalance is jacked up. That is where all of this strong demand's coming from. The demand is not coming from low interest rates only. I just want to make that clear. According to Zillow's, seasonally adjusted home values would increase by 2.9% between September and the end of 2020. They think a 3% increase just this year in 3 months. And a rise of 7% in the 12 months ending September 2021. This forecast is notably more optimistic than previously. The previous forecast predicted a 4.8% increase in home prices between August 2020 to August 2021. Looks like everybody's raising their estimates. I even think that 7% is optimistically low. That's what I think. So we can go down here. We look at new residential sales for September. Here's a chart here. Houses sold as it just goes higher and higher because we have a shortage. The latest weekly housing data released on October 24th, 2020 by Realtor.com shows that the median listing prices grew at 12.2% over last year, making 11 consecutive weeks of double-digit growth in asking prices. The price of the typical home for sale remains unchanged at $350,000. So new properties listed for sale were down 2%. So our inventory is getting eaten up. Total active listings were down 38%. More people are buying than homes coming on the market by a long shot. Time on the market is 14 days faster. Blazing amount faster. And here are our first 2 weeks. Median list prices up 4.5%. Week ending October 10, up 12%. Week ending here, up 11. Week ending October, up 12. And then we're supposed to be declining here, guys. This is seasonal weakness for real estate coming up, and it's getting stronger and stronger and stronger. Look at the total listings, down 16, down 38, down 38, down 38, and time on the market is faster. So, it's all intact. My videos and what I'm showing on my channel is that our thesis here is that we have a short deficit housing market. And my claim was that inventory is going to get eaten up and house prices are going to go a lot higher. Inventory is getting eaten up. Days on the market's declining because people are figuring this out. Prices are going way higher. Now, the prices are not going to stop if interest rates go up. And why is that? Because the supply-demand imbalance is jacked up, and what you're going to have is you're going to have many buyers for very little homes. They're all going to compete against each other to get these homes. When inflation starts to increase, rents are going to increase. People are going to start changing their analysis. They're going to look at the rent price and say, crap, to rent this house is $3,000 a month. I'm better off buying, even if the house is $600,000 and an interest rate is 3.5% or 4%. And what's going to happen is the rent's going to continue to just move higher and higher. And their analysis, regular people, because we have a shortage of homes, they're going to keep doing the analysis and say, crap, it's better to buy, better to lock in the rates, better to lock in my costs and be done with it. And people are figuring that out. They're pretty smart, and they're doing that. They're going to lock in their costs Inflation is going to come, and they're going to benefit as incomes go up because of inflation and their costs remain flat. If you like this content, please subscribe. This is Finding Value, and thanks for listening.